The Beach FM Business Lunch Show, brought to you by PlaceMakers Kapiti Horowhenua. Together we're building New Zealand.
Welcome back to the Business Lunch Show on Beach FM 106.3. Well, so much has happened over the time of this show, 5 months to be exact, and 4 months ago we caught up with Craig Pope. Now let's catch up with him again to see how everything is going from a loan market now. It is Craig Pope. G'day, Craig.
G'day, how's it going?
I'm very well. How are you doing, mate?
Yeah, it's been a pretty busy time for various reasons. I think certainly noticed that there was a lot of pent-up frustration after lockdown, with plenty of buyers armed and dangerous with pre-approvals held back by the lockdown period trying to buy a house. Yep. It certainly doesn't look like that's slowed down at all. There's plenty of activity in the market with buyers, trying to get across the line with a purchase, and subsequently, I don't think a lot of the agents would say that there's a real shortage of listings. So I think that sort of kept demand pretty busy for housing, and in turn that keeps mortgage advisors like ourselves pretty busy. I guess from a lending perspective, the biggest challenge borrowers face at the moment is with the COVID-19 challenges and lockdown and people losing their jobs and the economy looking very shaky, is that banks are being extremely pedantic around people's income, and that can particularly affect people who are self-employed too, in making sure their records are up to date. So there's a lot of I dotting and T crossing required these days, and I think people have struggled to adjust their expectations to the new lending world. And even though the Reserve Bank restrictions were removed, banks are still extremely cautious on lending money. So for people who are trying to borrow money or looking to potentially buy a home soon and subsequently needing to borrow money, just be prepared for banks, making you jump through a lot of hoops to get approved. So it's about sort of adjusting expectations, and I think that's one of our challenges at the moment, is that the other thing too is people trying to do things quickly, to secure houses, with the high demand and short supply. People are in a frenzy to buy things and get things across the line quickly, but unfortunately it's not that simple at the moment. So everything's a bit slow when it comes to borrowing money, it's just about sort of readjusting expectations of what you can and can't do from a borrowing perspective. Interest rates still remain pretty low, with in the mid sort of 2%, and even some of the long-term rates a shade under 3%. So money is still fairly cheap, albeit hard to get in some ways. And it's difficult to know. You hear conflicting reports all the time, but certainly if the economy still keeps going a little bit south, we're hearing reports that rates could drop down the track. But it's everybody's situation is different. And some property investors have been keen to lock in low rates for the longer periods, like 2 or 3 years, because it sort of helps them manage their cash flow of what they get from the rental income versus their expenses. Other people have been happy just to look and see, well, rates will stay low, or if not lower for the meantime, so we'll just fix for short periods like 1 or 2 years. And there's no right or wrong answer with the strategy. If you're just taking out a new loan, you might want to, we always recommend having a split of short, medium and long-term rates, just to mix it up a little bit to hedge your bets. So that could be a mix of splitting your loan into one 2 and 3 years fixed, and potentially a little bit on floating for extra payments. So some of the fundamentals haven't changed, but it's just about how if you're an existing borrower, how do you make the most of this, this low interest rate environment? Yeah.
You talk about managing those expectations with this pandemic, if you know that we're going through at the moment, and the banks being a bit tighter with purse strings, as in making sure that everything is crossed and dotted. What kind of follow-on effect do we see this last for? Is it so uncertain because it is a pandemic? I mean, it was a bit easier to predict a bit of a bounce back in '08 because that was financial, but this is just so cloudy, isn't it?
Yeah, it's a good way to explain it. It is very, very random in that respect. But it's not knowing just quite how long it's going to drag for, and obviously if you're having lockdowns sort of coming and going, it does make it a little bit different to to what's happened in the past. And I guess I did see a good graph the other day there, which went right back to the 1920s, and the cycle. You could argue that everything that's happened over the last 80, 90 years, each, like the Great Depression and World Wars, have in their own right been totally different events, from one to the next, but still almost had the same historical, outcome, where there has been a low for quite a period of time. So yeah, it's I guess it'll be one of those things we talk about in 10 or 15 years' time and look back, and whilst it's random at the moment, it may yet sort of match with historical data. But I guess one thing you can't control is a virus going rampant around a community, or the world for that fact.
Exactly.
And I think that's where things are, I guess, unusual and trying to pick that. And I guess that's one of the biggest challenges that the government has, that they don't have, they won't have a bottomless pit to, just keep topping up wage subsidies and things like that. So it just makes for an interesting few months just to see what plays out. And anyone's guess on what will happen, I guess. Yeah.
Yeah. With that wage subsidy being they kept on banging on yesterday that they didn't use it enough in the first one, so they had reserves. How is the follow-on effect in the market? I mean, there's only so much more money you can print, isn't it?
Yeah, that's true. And I guess probably what you don't hear is that there's probably a lot of companies that have actually paid it back. So yeah. I haven't seen any data where businesses that perhaps claimed it, not knowing how things were going to play out. And I dare say the Ministry of Social Development has probably been all over ringing employers, to check in and see if they were actually eligible. So it'd be interesting to see just what level of money's actually come back into the government's coffers. Indeed. Which has probably allowed them to extend it further.
Yeah.
But again, how long can they go on propping businesses up that were perhaps just not strong enough to start with, or with the world changing, especially tourism and hospitality and things like that. We come into a new normal where levels of business may be low for quite some time. So, how long does a government keep,
exactly,
throwing money at that? And that's probably one of the things that is difficult to really know just how long that's going to go on for.
Absolutely. My last thing I'll ask is I'm hearing more calls of extending mortgage holidays. What are some of the pitfalls that we can fall into? I mean, ideally pay your bills while you can pay your bills, isn't it?
Yeah, look, it's a really good question. Whilst the banks in theory are allowed to extend it, they're still going to grill you, before they grant it. And I think with the mortgage holiday, certainly, don't be quick to just take it. Just look at your budget and make sure that you actually need to do it. Some banks may consider an interest only as another option, which I think is better if you can afford it. So if let's say there's two borrowers, if one loses their job and the other one's still earning, can you relook at your budget and just stick to interest only payments rather than taking the full mortgage holiday? So just be really careful about extending it or even taking it up. Is always there, and know what the implications are, because at the end of the mortgage, deferment or holiday, whatever you want to call it, your payments are likely to increase. So you do need to be really careful with it. But in saying that, at the end of the day, if you need to apply for it or you need to extend it, that's what it takes to keep the wheels turning in your family household budget, then look, it is what it is. You just have to take it. But the banks they do have a series of questions they need to work through with anyone. It's not a given that you just ring up or apply online and you get it. There are some questions they've got to run through, because they are careful about giving it to somebody or even extending it. So just be aware of that if thinking about it.
Absolutely. Craig, I really appreciate your time, mate. I always appreciate our talk. So, mate, lastly, as always, where can people find you? How can they get in touch?
Yeah, they can get in touch with us at 0800 000 518. So that's 0800 000 518.
Craig Pope, thank you, my man. Thank you. Go well. We'll catch up soon.
You're welcome. Thank you.